Yesterday I sent out a chart of the small cap index, and there were some issues in terms of whether it really looks like a head and shoulders pattern, and that comes because it was an extremely upward slanting structure. But whenever I'm considering a pattern, and especially at such an important high, we must look across indices. What does it really look like, and show does it maintain that picture? So if you look at an alternate one, like say this one, which I just sent out on the mailing list this morning, this is the BSE 200. The BSE 200 shows you a slightly different picture. You can note that it's actually far above the neckline, unlike the mid and small cap indices that have actually broken the neckline. And in that sense, therefore, you have overlaps between the left and right shoulder. But one of the key requirements for taking a right shoulder, in this case, you might think this is extremely big compared to this, and that is pretty true. But I've also noticed over time that there is always an alternation between the left and right shoulders. Either the right shoulder is very weak in price structure, or the right shoulder bounces more in terms of retracement than the left did. Now in this chart, I also show what is known as a baby HNS, because this is not visible on the Nifty, because the Nifty fell much less than the broader market. And so in most of the broader market indices, you can actually draw an intermediate head and shoulders pattern that temporarily broke and then moved up again. Now, if you've read Martin Brink, you've read about multiple HNS structures. So what tends to happen is then you get a larger structure after that. And we've seen this kind of patterning even at the 2015, 2016 decline in the markets. We got multiple HNSs and kept slowly moving lower. In fact, even 2008, it was there. Only the declines were far more steeper, but you had two HNSs inside each other on the way down. So this does tend to happen. The key issue, of course, is when you're considering a right shoulder, it should be first a corrective rally. Usually the fifth wave should occur at the head, and so the fourth wave, like you see this triangle here, which is typical of fourth waves, tends to occur on the left side. And so that's one of the important criteria. And of course, finally, it's volume. So you get a fifth wave at the peak, and then you start a corrective decline. The right shoulder is in the first counter trend bounce. But the question is, do the volumes also support the idea that it is a counter trend bounce? And so I'm going to be looking at a chart of the Sensex that I pulled out from Iris. And the reason I used Iris or Spider software is their volume data, I believe, considers total market volume, unlike what I get in Metastock from Viratech, which gives you only the index volume. So they plot the Sensex stocks volume below the Sensex or below the Nifty for the Nifty stocks volume, but not the market wide. And so that can sometimes give you a slightly different picture. But when you're looking at the market wide data, as we are in this case, then we pretty much see a pretty big drop off in volume, because of course mid caps and small caps have fallen much more. They're in fact below the March lows in some cases, and definitely below this triangular phase which we've more or less bottomed at in case of the Sensex or Nifty. So they've fallen much lower, to closer to this range, and so which is why it looks very different. And so this drop off in volume does support the idea that if you want to draw an HNS, the question on Sensex Nifty would be, would you want to draw it this way and still look like a very odd structure, because the right side is very big. But for a visual picture, it looks much better if I actually take the right shoulder and left shoulder like this. Okay, so what may have happened here, similar to what we see in the mid cap or small cap indices, a very minor HNS development, but that didn't follow through to the targets. And now what you're looking at is one at a slightly higher degree. What would have really helped the bull case would have been, at some point during this rise, volumes would have picked up, because I did note here also there was a volume drop off, but eventually when we broke past the 10,700 mark, there was a huge volume expansion, which marks that final high or head that we are looking at. But we are really not seeing that kind of volume occurring here because of the underperformance of mid caps. But also in the large caps, if you take the volume structure, the volumes have not really gone up a lot. They just seem to be flat, but they're significantly down at a market wide level, and so do support the market wide idea that you're in a counter trend or right shoulder position for the index. And with that, I'm starting to look at the USDINR now. Unless you were in my very old mailing list before Indiacharts became, I moved to a new website which I did in 2013 as we launched the Insiders program. But prior to that, if you were on the Google list, which is the Google group, that's how I was distributing my views earlier across channels, and mostly publishing on a site which had no archives. So essentially, people who have not been there would not have seen my previous views. But 2006, 7, 8, this is what I was marking on the USDINR after what I thought had completed a 5-wave rise in the year 2002. Since then, it was in decline, and once this area formed, it became apparent that this was essentially a B-wave triangle, which you can see now more clearly. And then you started C down, which is very clearly 1, 2, 3, 4, and 5. And when that completed, the USDINR essentially bottomed, which was in 2007, 8, and then started an impulsive advance. So once that impulsive advance started, is when I started writing bullish articles about the USDINR longer term. Of course, just like you see pain in actually waiting for something to happen, I expected this wave to bottom out way early. And once it reached this fourth wave low, and then it broke that, and then I thought, okay, now you've reached almost 61% retracement, and then it spent almost a year forming this basing pattern, and then eventually a triangle. And at that point of time, volumes and open interest on the NSE data shot up significantly, making it very, very obvious that this ending pattern was going to work out, because the open interest was at a multi-year high, and volumes were also at a multi-year high, even though prices were at the lowest point in the range and were moving very, very slowly. So there was no volatility, but there was huge volume and open interest, showing very clearly that this third wave was going to start. And so that was 2011-12, and since then I was projecting the upside. My, of course, videos you can find on YouTube, where I've discussed it many times, that why we could be at levels up to 90, and it was a very simple projection. It was based on, anybody who knows Elliott and Fibonacci would know that, if you're thinking that the third wave should be 1.618 times, all I did way back in 2011 was I took the size of the first wave, then I projected that the third wave would be 161% of the first. Very simple minimum expectation from a third extension, which means it would go up to around 67 as shown on this, and we actually have paused a little higher than that. Only thing is, for a long time I had not resolved the third wave structure. I thought it would extend, but my original thought was, this in terms of Fibonacci rise, you'd go to 67, then you'd pull back, because this was 61%. I thought the fourth wave would do, say, 38%, and so you simply do a retracement from there, and you'd get a 38% retracement somewhere at around 55, or no, I'm sorry, it would be at around 58. And so then once you have that number, all you had to do is project the fifth wave as equality from the 58 level. So if this was the 58 level and I was projecting equality, we would probably be looking at around 78 as a final number. And then I did try to do subdivisions. When this initial first wave was done, I thought that the fifth wave, like here we have a double top, I thought the fifth wave would essentially be of full size, which means equal to this move, and in which case the third wave would have actually gone to the 2.618 times number, and the fifth to the 90 level. And so that's how I had the 90 level in mind at that point of time, that it could actually extend to 90 if the third wave was a little more extended. But the third wave has remained within 161% projections, and has now started the fifth wave. Now, the debate was, for a while I was thinking that the fourth would be a triangle. Now, if the fourth was a triangle, or is still forming a triangle, it would most probably not make new highs versus the high it has recently made, which is at 68.47. And what it would do then is go back down to test this line one more time at 64.26, and then complete this triangle, and then only move up. Now, that would have proven true if the dollar index started a bear market and continued to push the dollar lower. So far that has not happened, but it does still remain my view. But in the interim, what has happened is, in this counter trend bounce on the dollar index, most emerging market currencies have taken off pretty strongly. And having done that, what has also happened is the monthly momentum for the USDINR itself has gone into buy mode, and so the way it has done that, tells me that I should stay open to the idea that the fifth may have already started and will not complete a much more long-winded triangle inside this. So if it does continue, breaks out beyond 69, and the current move itself on simply the fifth wave being equal to the first, from here can easily project to around 84, 85, and so I should be open to the idea that that can be a more immediate case rather than it forms a triangle somewhere into next year, or several months down, maybe September, October, and only then the fifth wave starts. So those are the two alternate scenarios. You can still consider a triangle till this high is not surpassed, but like I said, the monthly momentum, and let me show you that. And here we are, and in this case for the momentum, I'm just using the MACD. The MACD line went into sell in the second wave, well below the zero line, and then started this third wave negative divergence in the fifth of third, and again back to the zero line, and now the monthly MACD is already in buy mode. So when that happens, especially taking support at the lower Bollinger Bands and then turning up like it did here, the chances are, what if we are just repeating the same pattern? We had this correction to the lower end, the monthly comes into a buy, and it was one long phase, and you could be repeating that. So it could very well be that you started a fifth wave, the second wave was a deep correction, the fourth wave was a sideways correction. There's no rule that it should always form a triangle, though triangles do form in fourth waves. So as a sideways correction, WXY or ABC, it could very well be complete. So if you continue to see a move beyond the recent high, that would confirm it. The recent high, like I said, spot is 68.4750, and if we surpass that, then we should be heading well beyond the 69 mark, and towards the levels of around 84 to 85 in the months ahead, if not higher. That is, if you get an extension. And if I look at the daily chart, you do see it again taking support here at the 40-day average, and recently this correction has been essentially a three-wave correction, and it has started moving up. So which is why once it's done this three-wave and up, I start to think that you may have already started the fifth wave, but final confirmation would be surpassing the high itself. And coming back to the INR chart, what is the 90 projection? So while the Fibonacci projection is up to 84, 85, you see this rising channel for the entire structure. The tops and bottoms pretty well fit onto this channel. And if this channel continues to be the holding point, then should you extend to the upper end of the channel, then that level is at 90. Now people always want to have some kind of a time projection. So once we do get past 68, 69, if we are heading higher, how much time would it take? And simply measure the time taken for each of the previous waves to make that projection. So if you take the first wave, how long did it take? And I'm looking at a quarterly chart, so this was 5 quarters long. If I take this new wave that started from here, and I'm taking it up to this high, it is also 1, 2, 3, 4 quarters long. Again, if I take the fifth wave of this structure, then this is 1, 2, 3, around 4 quarters of an advance. And so my outer time frame with this being 5 quarters is 4 to 5 quarters. Now if I do that, and this move starts from Jan 2018, and this is of course the second quarter that we are seeing, which goes into June, which means that if we are looking at 4 to 5 quarters, we are looking at either December of 2018, or we are looking at March of 2019. This would be the time period for us to actually complete 4 to 5 quarters of an up move that would then achieve the upward levels that we are projecting for wave 5 of USDINR. So that's it. In today's video, I've considered two important aspects of the markets and patterns, discussed the USDINR in very, very great detail as to what I've been saying over many, many years and how it has played out and why I'm still looking at it that way. Longer term, of course, this remains a bull market. Once the fifth wave completes for the USDINR, we would of course enter another bear trend in the USDINR where it would go down a lot more. So this is the final moves that we are really developing here over the next year or so, if it plays out this way. So if you like this video, do feel free to share it with everyone, and stay tuned and subscribe to this Indiacharts channel on YouTube. Also, you could sign up for the free newsletter at indiacharts.com. Thank you.